If you receive SSI benefits and someone told you that depositing more than $10,000 into your bank account will automatically cancel your benefits, stop everything you are doing right now, because what you are about to hear could save you from making a very costly mistake. Thousands of SSI recipients across the United States are being given wrong information every single day, and that bad information is causing real people to panic, make poor financial decisions, and in some cases, lose money they are legally entitled to keep. So before you do anything with your bank account, before you refuse a gift, before you return money that was sent to you, watch this entire video. Because the truth about the $10,000 rule in SSI is not what most people think it is. Now, before we get into the details, let me say something important. There are a lot of channels online right now talking about Social Security, SSI, and SSDI. Some of those channels do a great job, but a large number of them are posting videos with misleading headlines, incomplete information, or flat-out wrong explanations just to get clicks. Seniors and retirees deserve better than that. You have worked hard your entire life, or you are living with a serious disability, and the last thing you need is someone scaring you with false information about your benefits. This channel is committed to giving you clear, accurate, and factual explanations based on the actual rules set by the Social Security Administration. We go directly to the source so that you do not have to guess. So let's get into exactly what the SSI rules say about bank deposits, the $2,000 resource limit, and what actually happens when money enters your account. What is SSI and who gets it? For anyone who is new to this topic, SSI stands for Supplemental Security Income. It is a federal benefit program run by the Social Security Administration, also known as the SSA. SSI is designed to provide monthly financial support to people who are age 65 or older, blind, or disabled, and who have very limited income and resources. The key word there is resources. Unlike regular Social Security retirement benefits, which are based on your work history and the amount you paid into the system over your lifetime, SSI is what is called a needs-based program. That means the SSA looks at what you own and what you earn to decide if you qualify. This is exactly why the rules around bank accounts and deposits are so important for SSI recipients to understand. And this is exactly where so much confusion begins. The $2,000 resource limit explained. Here is the core rule you need to know. As of current SSA guidelines, an individual receiving SSI benefits is generally not allowed to have more than $2,000 in countable resources at any given time. If you are a married couple and both spouses receive SSI, that limit goes up to $3,000. These are called the SSI resource limits. Now, when the SSA says resources, they are talking about things like money in bank accounts, cash on hand, stocks, bonds, and other financial assets that you could convert to cash. They are not talking about your home if you live in it, your car if you use it for transportation, or certain burial funds and other exempt assets. But your checking account balance, your savings account balance, and the cash you have at home, those all count toward your resource limit. So here is where the $10,000 question comes in. If you receive SSI and your bank account goes above $2,000 at the end of any given month, you could become ineligible for SSI benefits for that month. Notice that we said at the end of the month. That is very important, and we are going to come back to it. But the key point right now is this. The $10,000 figure that people keep talking about online is not an SSI rule. That is a banking rule. That is a completely separate federal law that requires banks to report cash transactions over $10,000 to the government. It is called a Currency Transaction Report, or CTR. It has nothing to do with your SSI eligibility on its own. Confusing these two very different rules is one of the biggest sources of misinformation in the SSI community, and it is causing real harm to real people. The banking rule versus the SSI rule. Let us be very clear about the difference between these two rules because this is critical. The $10,000 bank reporting rule comes from the Bank Secrecy Act, a federal law that requires financial institutions to report large cash deposits to the Financial Crimes Enforcement Network. This law exists to help the government track potential money laundering and financial crimes. It applies to everyone in the United States, not just SSI recipients. If you deposit $10,000 or more in cash into any bank account, your bank is legally required to file a report. That is it, just a report. It does not freeze your account. It does not notify the SSA automatically. It does not cancel your benefits. And here is something many people do not realize. You are not breaking any law by making a large cash deposit. The report is simply a routine part of how banks operate. Now, separately, the SSI resource limit rule says your countable assets cannot exceed $2,000 for an individual. So if that $10,000 deposit causes your bank account balance to go above $2,000, that is when you have an SSI problem. But the issue is not the deposit itself. The issue is whether your resources are above the limit. Stay with us because the next part is where it gets even more important. How the month-end rule works. Here is something that surprises a lot of people. The SSA does not check your bank balance every single day of the month. What generally matters for SSI purposes is your countable resource balance at the start of each calendar month, specifically the first moment of the first day of that month, which in practice is often evaluated at the end of the prior month. This means that if money comes into your account during the month and you spend it down below the $2,000 limit before the end of the month, you may not lose your SSI for that month. For example, if you receive an inheritance, a tax refund, or a one-time payment that temporarily pushes your account over $2,000, you may be able to use that money to pay bills, make purchases, or pay for goods and services you need, as long as your balance comes back down below the $2,000 limit before the month ends. This is not a loophole or a trick. It is simply how the SSA calculates resource eligibility. That said, you must be careful and honest about how you spend the money. Using a large amount of money to purchase exempt resources, like home repairs or a vehicle, may also help you bring your countable resources back within the limit. But you should always consult with a benefits counselor or the SSA directly before making any large financial decisions. The reporting requirement. Now here is the part of this conversation that many channels skip over, and it is absolutely essential. SSI recipients are legally required to report changes in their income and resources to the Social Security Administration. This is not optional. If money enters your bank account, whether it is a gift from a family member, a settlement from a lawsuit, an inheritance, a tax refund, or any other type of payment, you are generally required to report it to the SSA. The SSA has specific rules about how different types of income and resources are counted. For example, gifts of cash are generally counted as income in the month they are received, and then as a resource starting the following month if you still have the money. This is why it is so important to report changes promptly and not try to hide them. The SSA has access to financial databases, and they do conduct checks. If they discover that you received money and did not report it, you could face an overpayment notice, which means they will require you to pay back benefits you received while you were technically over the limit. In serious cases, there can be additional penalties. The reporting rule exists not to punish SSI recipients, but to make sure the program is helping people who genuinely qualify. If you are unsure whether something needs to be reported, the safest and smartest thing you can do is call the SSA directly at 1-800-772-1213 or visit your local Social Security office and ask. You can also work with a Social Security benefits counselor, many of whom offer free services, especially for low-income individuals. Common scenarios that confuse people. Let us walk through a few real-world situations that cause a lot of confusion and fear among SSI recipients. The first one is receiving an inheritance. If a family member passes away and leaves you money, that inheritance is a resource, and if it pushes your bank balance above $2,000, you could lose SSI eligibility for those months when you are over the limit. However, losing eligibility for 1 or 2 months is not the same as permanently losing your benefits. If you spend the money down, you may be able to qualify again. You should report the inheritance to the SSA as soon as you receive it. The second scenario is receiving a personal injury settlement. Settlement payments from lawsuits can be large, and they can absolutely push an SSI recipient over the resource limit. There are special rules called special needs trusts and ABLE accounts that may allow SSI recipients to hold larger amounts of money without it counting toward the resource limit. This is an area where professional legal advice is extremely valuable. Do not try to navigate a large settlement on your own if you receive SSI. The third scenario is receiving a tax refund. Here is some good news. As of current SSA rules, federal and state tax refunds are excluded from SSI resource counting for a period of 12 months after you receive them. So if you get a tax refund, it generally will not count toward your $2,000 limit for 12 months. After that, if you still have the money, it could count. What about SSDI recipients? Now, a lot of viewers ask whether these same rules apply to people who receive SSDI, which stands for Social Security Disability Insurance. The answer is no. SSDI does not have a resource limit. Because SSDI is based on your prior work history and Social Security taxes you paid, the SSA does not put a cap on how much money you can have in your bank account. You can have $10,000, $50,000, or more in savings and still receive your full SSDI payment. The income and work rules for SSDI are different from SSI, but the resource restrictions do not apply. This is one of the most important distinctions between these two programs, and it is something every beneficiary needs to understand clearly. So let us bring this all together. Depositing more than $10,000 does not automatically make you lose your SSI benefits. The $10,000 banking rule is a federal reporting requirement for banks that applies to everyone, not a Social Security rule. What actually matters for SSI is whether your countable resources exceed $2,000 for an individual or $3,000 for a couple at the relevant evaluation point in the month. If a deposit pushes you over that limit, you may lose SSI eligibility for that period, but reporting it promptly and spending it down on legitimate needs may allow you to regain eligibility. SSDI recipients do not face any resource limit at all, and no matter what, reporting changes in income and resources to the SSA is both a legal requirement and the most important thing you can do to protect your benefits. If you have questions about your specific situation, do not rely on what someone posts in a comment section or what a video tells you without pointing to official sources. Go directly to the SSA, speak with a certified benefits counselor, or consult an elder law attorney. Your benefits are too important to leave to guesswork. Before you go, we want to hear from you. Did you know about the difference between the $10,000 banking rule and the SSI $2,000 resource limit before watching this video? Drop your answer in the comments right now and tell us, do you think the SSI resource limits are fair for today's seniors and people with disabilities? Your answers matter, and they help us know exactly what topics to cover next. If this video gave you clear and useful information, please hit the like button and subscribe so you never miss an important update about Social Security, SSI, or SSDI. We are here to make sure you always have the facts you need to protect the benefits you deserve.